Oh, what's up, everybody? Hey, a little quickie computer crash there for a hot second. I don't know what's going on with my machine. Not Rocket Super, my computer itself. I'm being weird blue screen of death lately. Windows. All right, everybody, with some new changes this morning. I'm gonna try to capture this real quick. We have like a new patch like every single day. This is great. There's all these little fixes. Okay. All right, you guys. Good morning. Good morning. All right, let's get my Good morning. Good morning. Where are my DD vans? All right. So we got opening out the day today. All right, another bearish-ish day. Let's see. We had response yesterday. Actually, market traded down a little bit after the... Everybody smash that like button real quick. Let's go. Y'all know the rule. I'll eat my breakfast. Ratio half. Every morning. Y'all smash that like button and we'll get started analyzing this market today. All right, y'all good. Y'all good. All right, let's go. All right, resilience less than 0. Reject hedge pressure. Trade down lower VRSU down to monthly. Break of hedge pressure to top of bear zone on a resilience greater than 0 kind of move. Now we don't have that. Nasdaq's breaking hedge to the downside. Be careful on this one. And also, any upside is going to be interrupted by VIX bulls on bottom. So even if we do break and continue to go, it's going to limit upside and it's going to pivot down as soon as VIX hits its bottom target. So this is a down day, maybe possible limited day. Now we did reach outside of DD bands this morning. So it's already a cautious yellow light already. So even if I were to trade anything, I'd be trading ultra small, or actually half my position, if anything, an ultra small outside the DD band. So with Nasdaq, we are outside DD band. So it's DD band break already out the door. And speaking of, mine aren't showing here. Colin, make sure that you're connected. Make sure you're connected. You need to log out and log in. Log out and log in. Everybody. Okay. Let me see really quick. Okay, let me look. That's so odd. Okay, well, how are mine loading? Yours aren't loading. What did I do differently? Make sure you load your liquidity map, everybody. Make sure you have the indicator here. Okay, hold on. Well, I can run tickers for you guys if y'all need to take screenshots. Just reference my stream. Okay. Reloading the indicator does work. Everybody reload the indicator. That's the first thing I said. Take the indicator off your chart and add it back. Or add it if you don't have it. Reload it. Or and refresh. Maybe I didn't say reload it. Maybe I just told you to add it back. Take it off, add it back. Try that. My bad. We add a new patch. We'll call it the barb patch. So wait, you guys, the indicator was just missing. All right. So make sure you save your layout. Yeah. All right. So somebody walk Colin through what you just did because he's somehow not able to fix his. You deleted it and reloaded it. All right. So Colin, remove it, add it back. It should work. You good? Okay, good. All right, Colin, toss me a full screenshot real quick, dude. Quick. Let's go. I'll help you out real quick. Throw it in chat. Colin, throw me a screenshot really quick, dude. And then refresh. Click refresh walls. Yep. Y'all, Alexander, Colin, you guys, listen, y'all got to post a screenshot. This isn't for tech support here. I know y'all are voicing your stuff here, but there's nothing we can do but sit here and be frustrated with you. So throw a screenshot up. I'm waiting. Don't be typing up things here. Type it there. That way because the chat, this disappears after the stream, right? But if you put it there, we'll get right on it for you guys. That should be the first place you go. All right, let's talk about the market. So what we're actually doing is making the watch list and risk interval going to be like a watch list. Like the risk interval here, it's going to become like a watch list. So you'll be able to add tickers at the end of the day, where that's a new patch coming out. You'll be able to add which futures you want, delete the ones you don't want. And this will be your watch list for futures, basically, with risk interval data. Here, on watch list, if you have something, the reason to have it like this is because you'd have a bunch of blanks and then DD if it was just futures. So we might just have basic price data here. Your risk interval data would be here to separate it out. But I think it's a great idea, Lee, because you want that data right here and to be able to add tickers you want. So somebody asked, could we get like MES DD bands? So what you're going to do is like be able to add things here and delete the ones you don't want, and it'll just call the data that you want. They had a few changes. It looks like they got this slightly off, so I'm gonna have them correct this, but essentially a little more clarification on which contract you have. Actually, hold on, let me tell them that. Wait. Music. Oh yeah, thanks. It's lo-fi. So we're outside of DD bands anyway. So today's kind of like a no trade day. Okay. Did you guys send up them screenshots so I can look at it real quick? Y'all need to follow rules, dude. I open up your not just full screen, but open up your status tab. I need to see that you're connected. And that's not full screen. Dude, this is all right. I'm going back to the stream. Alright. I'm going back to the stream. Like full screen screenshot, corner to corner, show your connections tab. That's all we need. That'll help us out tremendously. Appreciate you guys. Okay. Alright. Literally, I can't even. I got a screenshot that looks like this. Like make sure you get the full screen. I need to see everything in the left. I can't even see if you have the indicator added. You guys, y'all gotta help us out. All right, I can't help you anymore. Slacks will have to do it. Let's go on the stream. On the computer, you have a snipping tool. There's, what is it? Snag it. What's the name of that? Or just aim. If you're using your phone, dude, just aim your phone at the corners, like, and make sure you take a picture of the corner, like. Because I can't see everything you got on there. All right. Anyways, all right. We're outside of DD bands, which are going to be on NASDAQ. I'm just going to draw it manually here. So this is already a sit out day today. I'm going to let the market simmer. Really nothing to come of this. Resilience being less than 0. We're outside of the box. This is the new resistance today. Res less than 0. We're going to open. It's a gap and go. This is the high of the day. As long as Res is less than 0. QQQ as well. This is red DD band break. Oh my god. And then the person who just posted, I literally made an announcement. The person that posted below it didn't even show the status tab. You guys, y'all, if y'all can't follow simple directions, y'all never make it as a trader. You gotta do complex shit. Status tab. Y'all gotta be thorough. I love you. I'm just busting your balls. Jesus Christ. We just gotta see, I gotta see everything that you see, like basically, and I'm gonna make sure you're connected. That's just the only thing we got. The easiest thing we gotta do. I literally told our customer service manager, I said, ignore all requests that don't follow the, like don't go on a spree of like trying to figure out what's going on the screen. Like ignore someone's request, just help them until they follow the rule, and just tell them, you know, cut and paste what you need in the post. So you guys make it faster. He's not going to be able to immediately help you and start diving into your problem unless you put all the information. So the first thing they're going to ask you is, can we see the screenshot of your thing? So they can come in and look at it. Why I told him that is because if 5 people report something and like he's trying to guess what your problem is because he can't see everything, sometimes immediately we'll see it. Oh, okay. And let me let him know that fixed that. That's what my problem was. Okay, so deleting and adding liquidity maps by DD bands like the futures. Honestly. It's good to see. Maybe test patches a bit more too. Nah. They're optimizing this month, so they're trying to squeeze out every little problem we can find. These aren't patches for like cosmetic or cool changes. This is the point of this, is we're stress testing and finding every little corner of the platform you need to optimize. So it's gonna be messy for a little bit of a month, just a little bit messy. But yeah, they definitely should. The problem is that liquidity maps don't open until 9:30. A problem like this can't be detected until markets open. So there's nothing you can do about that with the calculation that's done at 9:30. Unfortunately. All right, brother, let me check you out, Alex. Status tab. Okay, so this person doesn't even have liquidity map open. Let me help y'all out. Step 1, if you don't have liquidity map added to your chart, you will not have liquidity map. So most of you have deleted the indicator, as we're seeing from the screenshots. Here's an example. I can't. Actually, that's somebody's thing. But yeah, make sure you have the liquidity map here. Sorry about that thing tomorrow. So what we actually fixed was liquidity map and Barb was posting about it yesterday. Uh, when you loaded our indicator with other indicators and took it, sometimes like other indicators, I found a scenario where it would like lose the candle data. I posted about in tech support yesterday. We called it Barb's issue. So now we fixed that issue, but what happened was you have to reload the liquidity map to get everything to take place. We need like an AI. We need to get the Discord bot to like start doing troubleshooting. We need to write the bot to do the AI responses with common problems, like a checklist. That'd be kind of cool. All right, let me check your screenshot, my man. I don't see your new screenshot. Oh, here it is. Hold on. No, I don't. Okay. So we're just going to let the market fall out and just chill today with the resilience is less than 0. There's really nothing to take off of this. It's just a chill day. We're going to hang out and chat, talk about some things in the market. In the economy, there's some things we need to cover. In general, it's not a trading day. We all know that. Look at this CD band, nice and fresh. Resistance. This is that high volume pivot that you'll normally see there. We're resisting here, resisting here. This is just a down day today. I don't short or play the game outside of DD band. Just let it fall. Oh, dude. Awesome, man. Let me see what you got. Okay. Yeah, so you have everything. You're connected. Your sockets are connected. The indicator is not showing up. Delete all your indicators and then switch tickers, add them back. Yeah, deleting it and reloading it at work. That's for whatever reason. We don't know why that had to happen, but this was today's fix this morning. This is the fix that we had. I'll tell you guys what we're working on. So do you remember like there's this little banner that says liquidity map at the top. Okay. If you actually took off the liquidity map indicator, that banner would still be there. So there are parts of the indicator that were just there even when the indicator was gone. So what we removed was the idea that, see, a lot of times you guys would remove liquidity map and it would still say liquidity map at the top, and you'd flip tickers and then sometimes it would pop back up even though the indicator was gone. So we fixed that, and that's what's causing this. So now reloading it fixed like that little thing. So this is basically just a remnant of like the original design, because a lot of folks are getting confused, like how come my liquidity map's not working, and Slack's endlessly is telling you to add your indicator to the chart. The first thing everyone didn't do is check, because you're used to just having it every day, and if you see that you might have accidentally clicked the X, it would say liquidity map and nothing would draw, and you'd think it was broken. The problem is you just didn't have your indicator on there, which is everyone's problem. So the fix last night was when you remove the indicator, it doesn't draw. I mean, it removes the banner at the top, which was weird why they did it that way. And that's just such a low priority cosmetic thing that we just were like, okay, it's not going to affect people. But apparently affected a lot of people, because it would confuse you to think it wasn't working when it really was. You just need to add your indicator back. So this was to try to fix that. And then the next patch was what Barb was mentioning yesterday. We're asking you guys to stress test and press everything to the corners. And then we're going to look at all the problems that we could find or have. And like Barb was playing with an indicator and loaded up a specific scenario, and I was able to reproduce it where we would remove the candle data would stop streaming. So we fixed that, and then something else. So keep throwing those things in tech support. I promise. We love this, because we're going to get this platform squeaky clean. That's all this month. We just cram features in so quick, right? That obviously it's time to clean it up. All right. It's probably something like that, Robbie. I would probably agree. Oh, all right, Alexander, I got you, bud. Try it. That's, yeah. So Baron, we got you working. All right, my man. Good deal. All right, Alex, dude, I don't know what to say for you. Let me see. The only thing I could tell you is probably reload your defaults. Something's in your local cache, like probably. Your layout with pop-up screens got deleted and the button to create new pop-up screens no longer works. Let's try this. Hold on. I just made a new pop-up screen here. This one right here. Click that, and it just popped out a new screen. Make sure it's not opening it up on like a different monitor or something. Oh, it's working? Okay. Cool. I have no idea. Yeah, we're looking into that. So sorry about this morning, but I guess mine popped up because I remember deleting it and adding it back. That's today. Let's take a look at some stocks. Let's see what we got here. IWM, same way. Apple, kind of same way. Let me add some more symbols. NVIDIA added to watch list. Oh, that's cool. Cute. When did they do that? That's adorable. Rockstar doesn't let her Nintendo Switch. That's okay if you got your Nintendo Switch open. You should be playing Tears of the Kingdom. You should not be trading. Which, by the way, I'm not gonna lie. Tears of the Kingdom ranking up there is probably one of the greatest, if not best, video games I've ever played. If you like Zelda, that game is a masterpiece. It's perfect. I'm gonna tell you, I don't say that a lot about games, but you have to like Zelda to like it. If you don't like Zelda, you won't like that. But in general, if you like the open world games, you're a Grand Theft Auto kind of player, or like Red Dead, nothing compares to the open worldness of the new Zelda game. It is. Okay, so think of like Breath of the Wild, which is again like really great. Came out in 2017. Tears of the Kingdom is like replaying Breath of the Wild because it's the same world, the same map, same game, but it's adding like 3 new layers to that. 3 new. It's like playing 3 worlds. It's hard to say without saying a lot, but it's like the expansiveness of how much bigger it got. It just got infinitely bigger, and the new stuff in the game is cool. So it's basically like Breath of the Wild, new game plus, with a million new things. The underground world. Yeah, it's an underground world. There's a sky world. It's pretty cool. I'm going to tell you, that's like, honestly, I could probably sink time in that game and not finish everything in years. There's like so much stuff. I got a Nintendo Switch during COVID because I was like, I need something mindless to do. I never had one before. I had a Wii. And I got a Mario Odyssey. I think it's the one with the hat. Where he throws his hat. And all I did was collect stars for like a month. I played the new Metroid game. The Metroid game was awesome. If you like Metroid, it's very much Super Metroid Remnant. They went back to the old formula. It's got that Metroidvania feel to it, which is pretty cool. And I played Breath of the Wild. Breath of the Wild is great. Honestly, the cool thing about Zelda is you just drop into the game and you start playing. There's not like go here, start your journey. It's not like follow the exclamation point for 60 hours. Kind of like the new Final Fantasy game was. I know my friends and everyone that played it were like, I like the new Final Fantasy. It's great. Honestly, it was just blah. I got to New Game Plus. I didn't even want to play it. Again, it was good. It wasn't terrible. It was good. It was a really good game. But it's so boring. It's such a boring game. It's good, but it's boring. It was like, here's your quest, go to this exclamation point. Here's your quest, go to this exclamation point. Talk to this person. Zelda is like truly open world. It's very much like Grand Theft Auto. You just go start doing stuff, and then you start finding stuff to do, and then the game starts revealing itself to you as you play. Like GTA 5, everybody played that. Same thing. After you get out of the initial opening quest, you're just kind of roaming the open world. You run into somebody in the streets like, hey, I need help. Okay, let's try this out. Oh, you need me to tow a car? Okay. Zelda pretty much like that. You just drop in and it's like, oh, there's something shiny in the mountains over there. Oh, there's like 10 other things over there. Well, let me go walk around, check it out. You just basically like aimlessly running around. Yeah. Alrighty. Looks like he's in my platform here. All right, so downward day. All right, let's talk about the market. So why are we trading down today? What did the Fed say yesterday? It was such a drastic thing. What's the problem, right? What are we dealing with? So the rate hikes came in pretty much as expected, right? I mean, it's pretty much a no-brainer what they were going to do. They're not committed to keeping it at 0 for the rest of the year. Clearly, when you go read some of the information that came out, let's see if it's still up here. If you look at the dot plot, you can see that the median forecast is that there's likely going to be at most 25 to 50 basis point raises by the end of the year. So it's going to be 2 raises probably at maximum. Minimum would be 0. I'm going to say we'll probably have one more rate hike. I'm going to meet in the middle between now and the end of the year. The issue that actually traded down on the knee-jerk reaction yesterday. Came from the terminal rate projection was a tick up, 5.1. So that does acknowledge the fact that there could be, that's the 3rd year. So these are forecasts of where the rates are going to be year after year. So essentially what people are saying is that, I'm trying to find the dot plot. Did they publish this here on, why is PMI loading a bit? Does that give me that data? Hold on. I don't know if I don't finish the juice had on there. Let's go to yesterday. Okay, so we'll talk about that. Oh, actually I tweeted it. So we'll grab it from Twitter. Jeez Louise, I need to filter this so I can just show them important stuff. It keeps recycling the same thing. It's not going back in time. Okay, let me go to Twitter. That's weird. All right, let's open this bad boy up. All right. As the years go by, the longer term projection is, if you look at the participants' assessments, these are like basically where everybody each individually believes. The median assessment is aiming right in here. So we can like take the middle of this dot plot. So the majority of people think 5.6 is about where we're going to be by the end of the year, give or take. 5 point something, right? 5.1 goes into 2024. Somewhere in here, 5-ish. Somewhere in here, 3.5, 3.25, then down to 2.5. So the Fed is committed to cutting rates over time, right? And that a couple people still believe that high interest rates rather than cuts are still appropriate. But by 2025, they believe their 2% target is going to be met. So essentially, the terminal rate this year going higher is, I think, what spooked Wall Street yesterday. And if you go read the data, these projections are here. This is first year projection. And as you see, in June, September, when we have these data points come out, it's like 5.1, then they're committing. Remember December of 2022? Right? We're like, okay, we're going to committing to cutting rates at some point, blah, blah, blah. Markets, we're not raising rates any faster. And they stopped raising rates, and then people were forecasting lower rate by the end of the year. So now, since March, June, and September, these things came out. These rate estimates came up a little higher, estimating at 5.1, right? So the terminal rate estimate went up, even though we're sitting at a 5.5. So could we cut rates by the end of the year? Maybe. Could we raise rates by the end of the year? Maybe. This is the whole thing. The idea that this ticked up 25 to 50 basis points gave a little spook in Wall Street. This is what it was. Because what it is acknowledging the idea that the Fed is more likely to raise rates as time goes by. Not just by the end of the year, but as you see, as March, June, September is a bull market, as the market becomes more bullish, the projection becomes that the Fed target rate is likely to be higher, acknowledging that the inflation issue is still a problem. And CPI being an uptick for the last two prints is what's telling Wall Street the higher the market goes, the likelihood of them raising rates is higher. Inflation will get worse. So it's like that double-edged sword. You know, the market becomes too high, the Fed is more likely to raise rates. Market becomes too low, the Fed's likely to cut rates. And that's exactly what we said that was going to happen back in the day. That the Fed was going to induce a recession and raise rates to scare Wall Street and then stop whenever it got too shaky. And then raise rates again when the market got too good. And I think I drew something a long time ago on Twitter, was that the Fed would do something like this. Like sit there at 5 and then rally up. And we'll probably be at 10% interest rate by the end of couple years. I don't believe that projection is going to be what actually happens. That's what they're projecting from today's data, which is fine. They're trying to drive us into a soft landing, but if this market starts rallying to all-time highs, you can bet your britches that the Fed is going to turn on the afterbirds and continue to raise rates to drive inflation lower. If the S&P breaks 5,000 and keep going, they're not going to cut rates. Oh, fuck no. No, they're not. They will continue to raise rates aggressively. This is how they've always done it. Based on today's data, if the market stays flat where it is, with inflation where it is, they're going to use that policy of probably cutting rates to stimulate. But if the market becomes overstimulated, then they're going to raise rates. They have to control inflation, right? Oh, that's cool, Charlie. I didn't know that. I've heard mentioned the break below 77 is bad news for the economy, XHB. So you use new home builds as a gauge of so many different things, right? Yeah. Supply side for home building, right? Like, remember in COVID when you couldn't even get a window frame for a window because the boat that shipped them from China didn't come over. So if you're building a house, you hit all these weird bottlenecks you never hit before. So there's supply side bottlenecks you can see in new home builds. You can see demand side bottlenecks by people not being able to buy a house for the multiple reasons they can't. Number one is the principal is too high. Number one, the interest rate is too high. Number two, number three, there's just too many buyers available. So you can see like a mix of supply side and demand side economics plus the ability of lenders to issue credit. It's all wrapped up into a pretty decent thing, right? So what's the bottleneck? People are only going to build if there are buyers ready to buy. People are only going to build if they can flip a profit. Buyers are willing to buy if it's more advantageous to buy than it is to rent. We're in a weird economy right now where renting is better than buying because you're going to pay so much in your mortgage and it's all going to interest. You're basically renting your house from the bank anyways at a much higher principal, and then your insurance and all that stuff. More people are renting, and then because of that, it's causing more people to buy at a higher price to turn into rental. All my friends are getting into the rental business now. Nicole's family members, same thing. They're all like, they can't get in fast enough. They're like, one of her family members has like 7 or 8 rentals that they have now. And they've gotten like most of them this last year or two. So that's a weird, we talked about this on the space today. Speaking of housing, there's a weird phenomenon that the people that need houses can't afford to buy them, so they rent them. So people that can afford to buy them and get the credit are buying them, and rents are going up to match those expensive mortgages. So it's driving some, but it's stimulating because there's new build. There's a whole lot of new building coming in. So there's no bottlenecks on supply side. There's people are freely building. So the housing market is a gauge of a lot of things. That long-term credit, long-term debt cycles that we talk about, the longer-term debt, home loans, 30-year mortgages, things like that are on there. I don't know about the indicator. I've never looked at anything specific, Keith, on indicator meaning something, but that's just me not knowing everything. I always can learn something. It's HB. Is this an ETF? Let's read about this. What is this? Oh, it's a home builders ETF. Oh, okay. I didn't know that. Do we have a liquidity map for it? We do. Maybe I should start looking at that. So I guess this would be all your what? I wonder which all your just your general home builders. I wonder if it's like Pulte and what's Lennar and all this different. Who is in? Let me look at the prospectus here. Overview. Yeah, I'm looking at it right now. Horton, Lennox, Lennar. Williams Sonoma is in this. Florin Decor is in this. Oh, okay, interesting. So this is like semi-diversified. It's not just home builders, it's home builders and home building supply companies. Carlisle, Train is in here. Oh, construction equipment. Okay, so this is a generalized ETF that kind of encompasses all of those parts of it. So you're gonna have, you have Train, so you're gonna have, and doesn't Train make like air conditioners too, right? Like other stuff. I think they make air conditioners. So you're talking about every single part of the it's building companies. Floor and Decor is like flooring and materials companies. So you get a little bit of everything. So you would say that in general, this is just health of the it's like a spot picking a couple of parts of the chain that should, it's like kind of like the Dow 30. It's like a couple of builders, suppliers, things like that. Yeah. So I think it's a good way to gauge in general, right? So homes in general, if this is home building, so clearly there's a delay between when you build and somebody buys. It kind of circles back. If a lot of people are buying houses, right, then the builders are going to see that and start building, and they're going to be able to sell them. So like an example is, think of it like this: everybody's a flat line, and all of a sudden the interest rate drops, okay, and then the amount of people buying houses move to a new baseline. They're going to be building the same. They're going to see the new baseline and go, oh, we need to build more houses because there's more people buying. Okay. So they go and get the land, do the stuff, build the houses, and then they hit their new baseline a little later. And so those houses become available, and then new buyers step in. If they buy more, then they build more. So it's like rabbit chasing its, that's the word I'm sorry. Dog chasing its tail. That's a good way to say it. So if this is stimulated from the companies that I see in that prospectus, if this is trading higher, I don't know if the number actually means anything. It's 77, like you said. I don't know I'm not very buried into this to know the significance of that, because this is an ETF based on the price of the stocks inside of it. I would give little weight to this number, if that's what you're saying, personally, because these aren't all home builders. What if Train goes bankrupt? Or somebody else, like they could find a new company to air conditioning, right? What if Florin Decor is having problems, but Home Depot's not? Like, the idea is that because this is such a cherry-picked ETF, I wouldn't assign specific weight, I would say, to the whole ETF. I'd rather look at each piece of it separately to kind of make sure it's not all of it together. So like one company could bring this down, and so it's hard to give magic value to that number, but maybe, I mean, that might be an anecdotal thing that people have noticed. So it's worth paying attention to. But in general, home building, like those are all the pieces of home building. You're going to see home builders will build if there's demand for that. Plus, if the demand, plus the delay it takes to get the house to market, plus the delay it takes for someone to buy them, there's time that they lose money. So they're going to build a house, right? They're going to make some money, or they're going to spend some money on the house. Then every month that they don't sell it, it's going to cost them money to pay for the land that they sit on. And then ultimately, they're going to sell. And they're going to get a profit. If this wasn't profitable, they're not going to be building. If they don't see however much time it takes, forecast how long it's time to sell and all that stuff, if they don't see there's a profit, they're going to build and they're going to slow down. So building will slow down because of that, or building will slow down for seasonality. A lot of people in general don't move until the summer, so they try to get a lot of houses to market by summer because people don't move when their kids are still in school on average. So in general, you want to assess home building as a good sign for the economy, because not only is it showing that people are employed enough that underwriters deem them for the current environment adequate for giving them a loan, whether it is whatever conditions the loan is, they have the money to pay the down payment, or they just have good credit. Either way, it's a sign of health of the job market. If home builders are building new houses faster, then they're telling you, 6 months later, the job market's healthy enough for people to buy them. They believe that. Also, that the front end materials and things like that go into the houses. Like, remember, it was really expensive to build houses during COVID because the materials costs went high. So the profit would go away if they couldn't afford, if they realized that they couldn't flip a profit on the houses or couldn't get the materials. So essentially, it kind of to me is like when you see new builds or new home builds going up, it tells me that the economy's healthy enough, 6 months out, give or take, that they expect buyers to be there to buy them at the price they are. So again, it's a gauge of inflation. Can people afford it? Will people have their jobs or have credit worthiness or job worthiness that banks will say, yes, we'll give you the loan. So it's a health of not only people's ability to maintain employment 6 months down the road, but it's also the willingness of banks to issue credit in general, loan money to people, which, as we know, stimulates the economy. As the economy is growing, GDP growth is quarter over quarter is positive. You need credit cycles to continue to press the market up higher and higher. These short-term credit cycles are supported by, lending from banks. You need banks to loan us money to spend money we don't have to boost the economy, keep it going. So new home builds are a sign of willingness of, if banks are drying up on houses, which are the safest investment out there, because you're investing in an asset, then they're certainly going to be drying up on a lot of things, right? Interest rates are going to go up on credit cards. It's going to be hard to get a credit card. Credit scores have to go up to get anything. So houses like that overall, say if housing looks bad, then everything's going to be bad. That's the way I look at it. As a generalized way to gauge the economy. So res is starting to play, but it's still negative, and we're still outside of DD bands. Remember, markets are random from here. How important is following all the fundamentals like you're talking about, primarily scout? Nothing is more important than understanding everything to the maximum of your potential in an environment that you're competing against other people who will. I don't play any game against anyone else without trying to understand everything they do, if not more. If the result, it's not a crossword puzzle where you're playing against a preset answer that nobody's competing against you. Your job as a trader is to outpace another trader and be better than them at trading. The more information you have about like charts and technical indicators may not be in your favor. That's not what I'm saying. But the more information you have about trying to understand the environment you're in can never be anything but a good thing. Does it help me trade better? Probably not, but it helps me make better decisions before I trade. It helps me say, do I believe what the market's doing now? Do I think the market's healthy in general? How do I trust what's around me? That doesn't mean it's going to make me a better scalper. But understanding that I can boil everything down. My understanding of fundamentals is not like, I really don't read a lot. I don't go into like understanding what a lot of other people say. I just always look at data, and I'm always thinking about relationships. I'm always trying to tie data points together to make it make more sense. So what does that tell me? All right, well, when I see that DD ratio is 0.88 and we're still in a very bullish market, I now can go to Twitter and I can hear two camps of people yelling and screaming at each other, bulls and bears. And I can hear them yelling and screaming, and I can kind of take a middle of the road approach. Well, who's more correct? And I can look at the data on the surface and understand who has a stronger position. Right now, the bulls have the stronger position fundamentally because of the few basic things. And I'm not chewing on fundamental data like these people are on spaces with us. They're fundamental geniuses. They can spit facts and numbers and details at you because they're very textbook about it. Me, it's a general relationship of like, are we in a recession or not? You can do one of two things. You can either say, well, what do people consider a recession? And go out there and read what other people think, or you define what you think is a recession from your experience. Are any of your friends getting laid off at your company? I know. Would you consider a recession just your local environment? How many people in your neighborhood are getting laid off? Do you still have money in your pocket every week? Are you still going out to the movies and going to dinner? Are you experiencing a recession? That's more important. And then you can see how the rest of the world is behaving. How about all your friends, family? Are they experiencing a recession? Why don't you define it? And that's how I treat fundamentals. Is I define it from experience of myself and things around me instead of like reading fundamentals. So the WT shall do the same thing. It's going to make it a little bit different than going out there and studying facts and details to try to like read the surface. It's to try to guess what you think is happening. Case in point was when the market was selling off, we said, well, the Fed tried to induce this recession. They're probably going to stop raising rates. Why? Because they don't want the market to collapse. Well, why? Well, because if they do, then we have inflation and a recession, high unemployment, which fires everybody. And then now we have something called stagflation. And we know that the Fed doesn't want to do that, because they said they don't want to do that. And so it's like the relationship is, okay, well, because of that, the market's finding lower lows and the Fed is raising rates faster. They're probably going to slow down. And then before the end of the year, they did. And then we rallied for a year. That one decision was the backbone of seeing monthly maps start to show a bottom of the market. And then we call it the bottom of the market. So how important is it to you to be able to do that? It's up to you. Well, everyone in the world is screaming bear market. The more you look into fundamentals, but like I do, just like tap into it. Just look at it, like make relationships. Don't go in there and try to study facts and study details to the extent that most fundamentalists do, because fundamentals don't accurately reflect the price of the market. You want to feel what the market's doing in light of what's underneath it fundamentally. And that's it. You want to try to draw a relationship knowing that the market's going to price in fundamentals ahead of time. So if you can guess that the fundamentals are going to change ahead of time and you start to get some bull signals, then your brain can stop being the last bear to the party. And what it does is it shifts you in a fundamental sense of being closer to the right side faster than other people. The problem with fundamentals is that people approach it like politics. If you're a bear, you're going to read stuff that make it sound more bearish. And you're going to start adding to your bear case, ignore the other case. Be like me. Approach it with no desire than to just see the truth. Look at bear case stuff, look at bull case stuff, and then just make a good decision. Sit in the middle. That's funny, Ralph. Yeah, so in your environment in medical, you're always hiring. Medical is that one thing that's like recession proof. There's always going to be a need for doctors because we have more humans. As we repopulate the earth with more people, you're always going to need a doctor. Can only see so many people a day, so more people, more doctors. One of those, healthcare is one of those things that never really has a surplus of employees. It's one of the few recession-proof type industries. Okay.
the way that I see it is that I listen, I guess I just always talking to my friends, and people are right now. My general feeling is my friends who are a mixed bag of wealth. Some of them are very wealthy. One of my friends is worth $100 million. One of my friends is an accountant. So my friends are mixed bag, and all of them actually are buying rental properties right now. So the way that I see it is that people with generational wealth and people with a very decent income at a steadily paying job both have expendable cash to buy houses at a high premium and high interest rate, so they can flip them and rent them. Because of that, it tells me that, at least in general, they're not afraid of their investment to make that investment. So when I feel the mix of, in Nicole's family, they're all doing as much as they can to buy houses as fast as possible. So I feel that because of that, banks in different cities are willing to loan money to people. And they're not like generational wealthy, but they're wealthy. They're both executives at companies. So have money to spend, and they're not worried. That's my thought is this, is like, I'm thinking about myself in my position. If they're making investments like that, then they're thinking about themselves in their position. They're not worried about their status right now. So when I look at things like that, it tells me, in general, now my circle's obviously diversified of income and wealth, but in general, nobody I know is in pain right now, unemployed, can't pay their bills. The folks I know that don't have a job, most of it's by choice or they're fine. So I'm not hearing around like my circles that there are people that aren't able to, get loans to invest in. So I think that tells me this. I'm just giving an example. That the story tells me that, it's a limited data set, of course, but if it were like banks weren't lending money to anybody, then people from top to bottom would be like, man, I can't get loans anymore. It sucks. Or it's too much. I'm not doing it. So the appetite is there. So just in general, if you listen around you, that's better fundamentals than trying to gauge like such a broad spectrum of things. Like if you go to a restaurant and there's an hour-long wait to get to a table at a sushi place, I'm sure the recession is not really there at that point in time. Nobody's going to go spend $250 on dinner and drinks if at their company, the person to the left and right of them just got fired. People aren't going to be that short-sighted. So like, if you think about like fundamentals, it's about understanding why things are happening. But in all honesty, if you go deeper than the surface of trying to draw relationships, you're just going to bury yourself in numbers that are going to not really help you understand the stock market. So to answer your question, Chase, to scalp effectively, no. If you're in a trade in and out for the day, you don't need to understand the economy as much as somebody that is investing for value. You're investing as a scalper in short-term imbalances that you can see despite what the Fed's doing. So what you do is you avoid trading when things that affect the economy come out. So don't even trade during events. If you don't want to care about fundamentals, then literally don't try to trade during fundamental events where people that understand fundamentals are trading. You understand the playing field that you're in, right? So to win trades, don't be scalping when the Fed's going to be talking or Jay Powell's going to be talking. Don't be scalping into a CPI report. Don't play that day. Sit out every day that's moved by fundamentals and only stick to nice, gently drifting days where it's all robotic. Does that make sense? So the answer, I just went on a long-winded question, is that in general, as a trader, it's better to understand, at least on the surface, what's driving the greater economy. Make a few relationships to try to predict tops and bottoms. Is the market, see right now we've been trading down, is the market bullish or bearish? Well, DD says it's bullish still. We're selling in a bull market. Okay. Monthly maps still say not bearish yet. Okay, these things are good. What conclusions from fundamentals in the future? If the market's pricing in the future, then it's saying in the future we're pricing in a healthier economy. And so I go to the data, like what are the things I look at? I don't look at much. I look at Honestly, my definition of recession in broader sense is GDP quarter-over-quarter growth is negative. You're in a recession the moment your GDP is negative and unemployment's going up. Those two things. That's it. You're laying people off because some kink in the chain is slowing down sales, and you need to cut to match. And demand is down, or supply shortages, whatever. So you're gonna lay people off because you're slowing down. You're just not growing, and then GDP is growth, and you're not growing. Lower GDP means shorter swings on short-term credit. So like you're not getting bigger, like, you know, you have essentially, here's your GDP growth over time. Here's your long-term credit cycle, and then you have your like short-term credit cycles through there. Your credit cycles will get bigger the steeper your GDP slope is. The faster, like if your GDP is sloping faster, and you're gonna see more credit being issued, right? So this is like generalized economy, like 101. It's like page 1 stuff. I'm not going deep into all the details. Well, what my goal is as a trader of the index is to try to forecast what the Fed's gonna do in a broader sense. Do I agree with the market pricing in a greater bull economy? Well, GDP's growing and unemployment's coming down. That's good. Okay. How do I know unemployment's coming down? Well, there's a data point that says continued jobless claims are coming down as a whole. And I just think of it like that. Okay, so maybe I'm just gonna sit out on bear days because I know at any moment in time the bulls are still ready to strike or the bears are ready to squeeze. And so the fundamentals help me understand, should I be trying to short this every day or should I just be waiting for the next bull uptick? And so my general approach is, even when scalping, I do understand the fundamentals because I'd rather sit out on choppy days like this instead of saying, okay, you know what, it's time to short, this market's crashing. And instead I'm thinking, I'm just going to sit out. If we break hedge pressure to the upside, I'll take the long. So I try to align myself with the market and only trade that side. And that's how I've upped my success rate and my win rate tremendously, is that I'm only trading the market that I'm in. If I'm in a bear market, I'm only going to short, and I'll only long on hedge pressure breaks to the upside. And I'm not going to try to long scalp in a bear market. I'm not going to try to short scalp in a bull market. And so how do I know? Well, Rocket Scooter details are DD tells me bull market, monthly hedge pressure, bull structure for the month, check and check. Monthly map shows me not bullish, not bearish. So nothing bad yet, market now. And then I go to the fundamentals as a backup. Okay, what do I see in the fundamentals? Well, it's good. It's getting slightly better, and the Fed's likely to be less aggressive. Okay. So let me just wait this out, and there'll be another wave up. And I think of it like that. It's like when everybody was excited buying crypto, you sold all that at that exact moment. There's a rule of thumb, yeah. If I tell people this is a really funny rule, but this is a rule of thumb. The minute somebody reaches out to you on Facebook, let me write this down. Somebody reaches out to you on Facebook and goes, and they say the exact same thing every time. Oh, you're a trader? Yeah, I've been following you for some time. Like, I always see your trading posts. Anyways, what do you think about this? I'm just curious. I don't know any traders. At that moment, if you own that thing, you sell it. Get the fuck out. You're dead. That investment's dead at that point in time. When strangers from your high school graduation class reaching out to you on Facebook to ask you what you think about NFTs. Abort fucking mission. You're done. That's the moment it's over. If your grandma calls you and asks you about crypto, that trade is over. And it's always the same way. I bet y'all be, oh, I got a message like that. Hey, you're a trader? I have a question. I see you always posting about trading. I have a question. What do you think about what's it called? Board Ape Boat Club. What was it? The Board Ape thing? I don't know. I'm thinking you're like, the minute they say that, you pack your bags and run. Don't even let them finish that sentence. Just get out of Dodge. Run quick. That's the moment it's over. Because that entire act is somebody reaching out to a stranger ready to throw money at an investment based on what they heard from somebody they haven't talked to in a decade on Facebook. That is peak desperation and stupidity. and FOMO. That they're asking a stranger they don't know for financial advice because y'all went to high school together. At that moment in time, you know, everybody in the world is throwing their money at the high. Get the fuck out. Yeah, I know it's Yacht Club. I was making fun of what people would say. They would go, because they don't even know what it is. That's how dumb they are about it. What is this? NPTs? What is it? NRAs? In NFTs? Is that what you're asking me about? Yeah, NFTs. That's right. Like the pictures, right? I feel like they've been going up. I mean, this one was 60,000, now it's 300,000. I mean, what if this one here? I had this guy in my office that told me he has this one. They're doing the special drop, and the buddy's cousins with the Yacht Club guys. They got all the connections. It's gonna go, and you're just like, Pete. His name's Pete. I'm just making him name. Pete. Let me give you the first word of advice I give everybody. If you're taking investment advice from somebody on Facebook you went to high school with, you haven't talked to in a decade, you're a fucking moron. Okay, and I need to slap you in the face right now. If you're that willing to make an investment and ask a stranger to do it, everyone else in the world is doing this. You're the last in line to buy something. What makes the value go up? Is it somebody buys it after you do? You don't got any edge. Or else you'd be telling me the edge years ago. When an NPC reaches out about NFTs, you know it's over it, right? Yeah, don't. I never post about trading and my personal stuff. Never. But that's just because I don't really post a lot anyways. On our Twitter, on our Roxy socials we do, but like, trust me, in the crypto craze, I had a lot of my friends. Like, I went to a wedding. Somebody in Nicole's family got married, and all the guys were like hanging out, like my age. They're all investors. They're all business folk. And actually, there's some of the people from the story earlier that they invest in my house and stuff. They're very, very intelligent people, and they are very much into crypto trading. And I remember sitting there with them, and crypto was like peaking out and then crashing, and they were like, so, but they know I'm a trader. Like, so Matt, what is your thought on crypto? And I'm the only person that said crypto is. I think I soured some of them by saying I think crypto is a dead. I didn't know they were all investing in it. They're like, so what do you think about crypto? Are you gonna buy this dip? And I was like, crypto is gonna die in the next couple of years. And the economy is gonna kind of be in a weird spot for a while. And then all of them were talking about like where they were going to get in on it. Now they're not dumb investors. They're betting on crypto as a momentum play. They don't believe in it the same way I don't, but they're like, because it dipped, let's buy the dip and make some money just on the run up. I was like, but they're like not traders, so they're just, you know, they got money, so they got money to waste, I guess. They're more like trading it for momentum. Get in, hold it, get out when it goes up. But some of the people I didn't know, like some just other people sitting in the circle that were like, just like in a wedding, like, yeah, I know crypto is probably like the next big thing and it's gonna like replace money. I mean, maybe I should get in on it. And I'm like, that's not the mentality you need to have. Like, these guys stand to the right. I mean, they're buying it because it goes up hundreds of percent. They're gonna make a profit quick and get out. I'm sure they don't believe in crypto being worth anything. They just play in the waves. So you'd be careful because these other people in that circle, we're just sitting around drinking at the wedding, is, you know, they're hearing people talk about it and they could think of it from a completely wrong perspective. So that's why I'd like, you know, by the time that group of people, the casual, amateur, interested in maybe investing in it at the time that everyone's just playing swings of volatility and I'm not touching it. And they're like, maybe I should get in on this. And you're just like, that's the end. That's when you know it's over. You know, people, their ears are buzzing. They walk over, and once the moral of the story is, once the uninformed investor becomes peak interest in an investment and ready to dive in off of such loose guidance from a stranger, you can maximize You can say that stupidity has been maximized. Well, I don't say there's. I call it peak stupidity. It means the top of a bubble. When an uninformed investor is ready to go all in fear of missing out, that's the moment that the market pivots. That's the end. Yep. So we're just wrapping today. Nothing really going on. Resilience is still negative. Blah. I don't like it. All right. All right. Looks like we're good here. Something okay. All right. So, but I'll just say in general, Chase, that if you guys are like, man, I don't really care about fundamentals. I just want to scalp and day trade in and out. You don't really have to care about fundamentals to do that. So then physically don't care about fundamentals. Meaning that if it's a day with a news event or an event, just don't trade that day. Does that make sense? Like if you have no grasp of what's going on with the Fed and interest rates and CPI and inflation, and don't trade those days where that stuff is front and center. Just avoid those and just trade in between those events. Honestly, in my scalping, like I said, it makes the broader decision for me. Like right now, do I try to short this or I just sit out because it's a bear day in a bull market? And that's that's really what fundamentals are good at for me. It's I can say every red day or every green day. Like if there's a bear market and there's a nice big green pop day, I'm not immediately going, okay, it's bullish now, let's go. Right? I have a deeper view of the market that I know what to trust. And like right here, we've got, 2 or 3 red days in the middle of a bull market. I'm not ready to go bet on the market collapsing because the fundamentals are keeping me from seeing that. And Rocket Scooter alone can keep you from seeing those things, but it's better to have the well-rounded approach. The positional data is still showing bullishness. The monthly map's still showing not bearish yet. Monthly hedge pressures are still showing bull structure. So all the 3 major things we care about for bull market are still there. Volatility is obviously trading up, so that's not a problem yet. So we're experiencing some volatility now. And that's the way I approach it. I'd rather be more cautious than aggressive on days like this. And that comes from a fundamental understanding. I'm saying, well, the economy's still doing all right. Okay, what's the Fed doing? We're likely to maybe sit flat till the end of the year, maybe 1 rate hike. They did up the probability of a higher forecast for terminal rate end of the year. Okay. What do we think of that? Is there a rate hike coming in? Probably. Is the market pricing that in now? Probably. Oh, okay, cool. It's not really, market's not crashing right now. Just pricing in a rate hike. And then that's it. That was that whole conversation was for that one sentence. Why are we selling off today? And you want to give your best guess as a trader. Everybody, why do you think we're selling off today? Would you say it's probably because they're pricing in a rate hike by the end of the year? Oh God, I did. I went to Bitcoin Miami. That was peak stupidity. I had a great time though. I literally had the best time. The longer your time frame, the more relevant the fundamentals. Relevant to what? To trading, to understand the economy. There's no fundamentals are an infinite spectrum. There's long-term effects, short-term effects. You know, you can view cycling up to 100 years out. This is typically average of long-term cycles. So the larger your time frame, the more relevant your fundamentals, and more like it's more appropriate to say something like fundamentals are slow to move everybody, right? So fundamentals aren't necessarily going to dictate intraday trading until they do, like today. So it's like, yes, on a general sense, the market prices in something very quickly, which is what we're seeing now, pricing in a rate hike. But as far as allocating your capital in a fundamental sense, it's a slower moving ship because number one is the market immediately forecasts that, which is now. Same example, high probability there's a rate hike by the end of the year. Okay, market's pricing it in now. Then time has to approach that moment, and then we do get the rate hike or don't get the rate hike, and people's estimates of that coming or not coming come in, and they try to price that in along the way. You have to wait for like the rumor, speculation and rumor to be priced in. Then the dynamics change between now and then as well. And then what do people do when we get there? So whatever investment you make, you have to have an appropriate time frame that incorporates all of that, no matter what you buy. You have to go through all that speculation phase, pricing in the rumor phase, and then coming to reality phase. Understanding that you want to see the fundamental change before it's the rumor phase to make the investment. The example is if I could have pieced together the idea that the Fed was going to raise their terminal rate by some kind of other fundamentals I added up and said, oh, you know, high probability the Fed is going to raise rates. And I made that bet first, and then they come out and talk, and that was right. And then I just made money on the knee-jerk reaction by shorting without anticipation. So like right now, an example would be what are the greater fundamentals? So like one single data point like that gets priced in very quickly, and that's not the greater fundamental. The greater fundamental is the trend of those data points. Are they continue to raise rates? Are they going to stop raising rates at some point in time? Are they going to start cutting rates? So what are the next 5 to 10 to 20 data points? And it's kind of easier to see that sometimes than to forecast the bigger thing. I think everybody right now in the world can agree that the Fed is no longer going to press too hard on interest rates, as they're saying that themselves. So the farther you zoom out to allocate your capital, I think it's safer to say that fundamentals in a broader spectrum affect a longer time frame for an investment mentality, because you need everybody on the same page to finally feel safe again, which is like a slow trickle in. Example is, you know, the market traders will immediately price in the news, and then the market will have some volatility from that and then settle out. And then as time goes by, if people start piling in little by little, then the market starts responding from the sentiment of everybody, and then it starts moving in a direction. So an example is the Fed starts cutting rates, the markets immediately rally for a week and then settle out. All eyes are on the next 5 or 6 meetings then, and investors start to feel like a safer environment. They're going to start trickling in little by little and slowly building that back up, while Wall Street priced in those 4 or 5 next meetings immediately. And it's kind of like this feedback loop where, yes, the farther you zoom out, the more you're going to have I would say more relevant to fundamentals. So fundamentals are relevant to all aspects. For example, probably had the strongest 2-day move that we're gonna have this month. 2-day move on fundamentals alone. So it's like the answer really is, do fundamentals affect your day trading as much? The answer is the only decision it does to me is tell me to sit out more. It's not like, okay, fundamentals are bad, I should do a short day trade today. It's like fundamentals are good, and the long haul, they're decent. They're not terrible. They're not great. If it's a scale of 1 to 10, fundamentals are sitting at like a 6 right now. Things are okay and getting better. Slightly better than neutral. Okay. And then the immediate effect of like Fed is bringing the market down for a couple days. Then I tell myself, okay, a couple day knee jerk, and over time, the market's going to recover slowly to match the economy. And so I think of it just like that. Good question. Yeah, if you can post that video, I like that. Leave that. I'm doing quick mock-ups here. Yeah, sorry for the excursion day, but it's sit out day anyways. Lucky for us. How confident am I to sell options given the setup? Yeah, today would be a day that I would sell above hedge pressure. That's what I would do. That would be kind of more of an easier setup. But I would be in a position where I could sell calls here and buy calls on the upside of close. Like the fact that we rally and find higher highs today would be it. So if I were to be selling options, oops. I would approach it just like this. Like right here, I would sell calls, buy calls like that, which is basically betting that the market doesn't end up here, and then it's a fixed loss if it rallies, and it's a gain if it does anything else, right? So like that's a great way to trade something like this instead of picking a directional move. I would be a fixed loss in case it broke hedge pressure to the upside. That's how I would set it up. Yeah, good question. Alexander, thanks for your video. Appreciate it. I'll take a look at it in a second. Well, with ECI, the most confidence is energy supply imbalance. The global transition to renewables will be slow and painful. I agree. I 100% agree. Transition to renewables will be I mean, you've got hundreds of years of like dynastic wealth built around fossil fuels. I mean, you'd have to change everything. I mean, imagine things like this, like even like not just thinking about, a lot of people think about cars and powering your house and stuff. I mean, even appliances, right? There are appliances that run on natural gas. Imagine like everything like that's currently out there. How long is somebody going to go out there and replace their 50-year-old gas stove with a electric stove? We're going to still need gas, and people only like cooking. It's like, okay, there's a lot of people still stuck in the current. It's going to take 50 years for like that shift. Trying to take a quickie screenshot here. I can't do it fast enough. Oh well. All right, we're gonna call it a day. We'll see you guys. We're gonna have a Zoom call. We'll do it in about an hour. We'll see y'all then. I'm gonna get out of here. No trade today. Just kind of wrapping, just chilling. That's how life is. Sometimes you don't get it. Set up, market open, will DD band. So we know to sit out, stay out, not do anything, take it easy. And that's how we do it over here, Rock Scooter.